about. Can you tell us a little bit about what is alternative data? What makes alternative data different from regular old data?
Yeah, so I think the thing that's confusing about alternative data is that it is largely a made-up term that came about probably around 5 years ago. It basically refers to any kind of data that wasn't around more than 5 years ago. And so that kind of data is data on public websites, email receipt panels, app data, transaction data, clickstream data, and then literally 500 more pieces of data out there. A lot of companies packaging up the data that they have, anonymizing it, and then selling that. And so that is the world of kind of alternative data.
Okay, so maybe you could tell us also a little bit about YipitData and what does it do in the alternative data business?
Yeah, of course. So our customers are hedge funds, mutual funds, pension funds, family offices, basically anybody that is actively making stock decisions. They're actively picking whether to invest in eBay, Etsy, or Zillow. We started about 5 years ago. We had a previous company that we morphed into YipitData. So when we started 5 years ago, we were 3 people. Now we're 120 people. And we work with over 180 funds now. And these are the largest kind of funds in the world that you would recognize. The problem that we solve is that in the last 5 years, there's been this explosion in data sets that are available for investors to use to make better investment decisions. And there are about 5 funds that have gone out and built huge data teams internally where they're spending $20 million a year plus on data, and they've hired 50 to 100 people internally just to identify, cleanse, process, and turn that data into insights for their investor teams. And the problem is that 99.9% of funds can't do that. They don't have the business model to go spend that much money on data and hire that many people. Culturally, business model-wise, it's very tough. So it's created this existential threat in the investment industry where if you're an allocator to these funds, the question you're asking them is, how do you compete against these 5 funds that are spending all this money collecting all this data? We are the answer to that question. And so we are the 100-person data team at 1% of the cost. And so just like those 5 funds that are doing it internally, we go out, we collect all the data that is out there, we license all the best data sets, we figure out which ones are compliant, we figure out which data sets apply to which companies, we combine different data sets together, we ingest that data, we cleanse that data, and then the fundamental investor that is our customer, we then feed them answers to their key questions using that data. And so as a result, we kind of level the playing field so that they are getting the equivalent insights that those 5 funds are generating internally.
Okay. So now when we talk about Wall Street firms, and certainly the data out there in terms of spending by asset managers, active managers, we've seen, it seems like a real explosion over the last even 5 years or so. People are either utilizing it or at least kicking the tires, getting their feet wet. But can you provide a little detail on how maybe different managers use some of this data when they're making their trading and investment decisions?
Yeah, so for instance, the problem with data, and I'm sure everyone in this room experiences this, is that data can often have the Google Earth problem, which is, I don't know if you guys remember when Google Earth launched, it looked like the most amazing thing, satellite imagery, you go to the Eiffel Tower, you went to your house, and then you never actually looked at it again, right? And that is sometimes the problem with data, is it looks really, really interesting, but is it actually solving a key problem you have that next day? And so what we always say is you don't want to be Google Earth, you want to be Google Maps, right? With Google Maps, it's a service that everyone uses all the time because it solves a problem. I need to get from point A to point B. I don't need a satellite imagery of it. I just need the directions, and I need to know where I'm going. So similarly with data, the misconception is you found this great data, here you go, good luck. That's never going to work for these investors. The problem that the data solves for the investors is they have very key investment questions. So for instance, if we were all working at a fund and we were investing in, let's say, Etsy, which is a marketplace where different sellers can make different kind of handmade goods that get sold to consumers, we're going to have some real questions, such as how big is that market? How is a cohort of sellers doing, meaning the last year's sellers? Are they performing better or worse than the previous year's sellers? Maybe we're running out of sellers to sell to. Is there free shipping available with all these things? And so how do you answer those questions? So for instance, one of the things that people used to do a lot of in the investment world is surveys. Is they would go out and they would ask people, hey, you seller, how are you doing? Hey, consumer, are you buying stuff from people or not? The problem is in the investment world, you need to be very accurate with those conclusions. And the reality is those questions I outlined can be answered very accurately with alternative data. So for instance, when you collect data from Etsy's website, you can see exactly how each seller is doing, how much they've sold. And then when you look at stuff like email receipt data as well, which are anonymous panels, you can see how consumers, are they churning, are they buying more, what's happening from a year-over-year basis. All of which, as you can imagine, is a much better way to get answers to those key questions that they have.
So in other words, it's not necessarily a silver bullet if you're not going to go out, find a hot data set and suddenly start beating your benchmark or crushing the market just because you found one particular stream of insights.
So I think that is the key here is that the data gives you answers to your questions, but there's also where the investor has always made their money is in the interpretation of what is being presented. And so for instance, everyone can read the filings. It doesn't mean you don't have to read the filings, but it's the investor that can more intelligently read between the lines, look at this footnote, look at this different statistic that they cited and then correlate that back to a year ago. That's where the alpha comes from. And similarly with data, the first step is kind of presenting these answers to these key questions, but then the second step is let me take these answers, combine it with everything else I know, and I actually think even though the data looks positive, it actually spells doom for this company in a long-term basis because of these three other factors I'm aware of. And so really, as you can imagine, what I just described is also a tremendous amount of work. These investment funds are 12, 15 people, 30 people. What I just described takes a team of like 50 people to have licensed that data, correlated that data, identified the Etsy product, parsed the data, et cetera. And that's why people come to us to provide that service to them.
Right. Now, what about outside of Wall Street? Are there other applications on the commercial side beyond finance?
100%. So I think this is one of the biggest kind of cutting edge applications we are seeing. Is really Wall Street, as you can imagine, they're going to be at the forefront because they see the fastest ROI, right? They make this investment in data, they see what the ROI comes, everyone gets into the market, and so it happens really fast. And it's happened globally. We've seen it in the US, like about 20% of our business is actually Chinese funds. They're investing in Chinese companies where we collect data on Chinese websites and provide that to them. So this is a global phenomenon. The cutting edge that we're seeing now is really starting to look at other buyers, other potential users of that data. So specifically corporate, private equity is starting to get into this. And the idea is that when a company is looking at just their own internal data, it represents just a very small portion of what is possible. But there's a lot of third-party data that's sitting out there, this alternative data that can help them make, just like investors, help them make better business decisions. So for instance, when you look at it in the ride-sharing space, if we were all working at a company like Uber, one of the big questions that we're nervous about is what's our market share versus Lyft? How is our Chicago market doing? Is it doing well or is it not? How's our market share doing in Brazil and Australia? Are there new competitors we should be worried about? Is our pricing right? These are really important questions because everyone's looking at Uber, then they go to Lyft. If Lyft is a little cheaper, everyone uses a Lyft ride instead of the Uber ride. Uber's market share goes down, which means they have less money to spend, et cetera. So these are like really important questions. But the reality is actually that data does exist out there. Whether you're looking at the transaction data or you're looking at email receipt data, those companies are starting to use that data to get a better understanding of how they are performing relative to competition, inform their pricing, et cetera. And this is not surveys. It's not asking people, would you switch to Lyft if it was a little cheaper? This is actual usage statistics of what people are actually doing.
Right. Now, you talked about how rapidly the industry has developed and changed in, let's say, just the last 5 years. And it seems like we've seen just an explosion in the number of providers and in just the number of data sets out there. What was the inflection point? What have been the main drivers of this trend?
I think a variety of things. The first is just that our lives are much more digital than they were 15 years ago. 15 years ago, there were no real apps, so there was no app data. 15 years ago, I don't know if you remember, you probably got very few email receipts ever sent to you. You were getting paper receipts, you were getting bills in the mail. And so that was a much more challenging thing to digitize and actually organize and then be able to bring out a panel. And then even on the transaction data panels that exist, data on websites 15 years ago, this is the thing people don't realize, is data on websites is the largest publicly available data set in the world, and it doubles every year. So for instance, in the last 10 years, there's 1,000 times more data on websites than there were 10 years ago. And so there's been an explosion in the amount of data that's available. There's also been a growth in demand that comes with that. And then the bigger the market gets, the more companies who are sitting on really interesting panel data are starting to ask themselves, why am I not trying to monetize this? If we can get comfortable as a business, when you monetize this data, you've already done all the work. This data is just sitting there and it's not being monetized. When you monetize this data, it's like 95% margin, right? That data goes straight to the bottom line. And so there's a bunch of companies that are sitting on really, really valuable data sets. And obviously the concern is from a PR perspective, how do they kind of handle that? But many companies have gotten comfortable with that. And as a result, they're seeing very, very attractive, EBITDA flowing into their business. That is I'm talking about millions and millions of dollars, tens of millions, and sometimes even more than that.
Now, given the scope of this data, what about privacy concerns? Is there a worry that rising concerns over privacy could be a problem? Do you see customers at all hesitant to take on some data sets because they're worried about privacy considerations, that sort of thing?
100%. I think, those 5 funds that have built out those big data teams, one of the reasons those teams are so big is they've probably got about 5-6 people that just are vetting the vendors. And they're confirming, do you have the right to have this data? Has the consumer on the end, have they truly selected themselves to be a part of this panel? And that's a tremendous amount of work. And so when we license different data sets, we have to go through an entire compliance process with each data set that we work with, because we know that if we end up trying to sell to a fund who is a regulated industry, they have whole compliance, legal compliance departments, we have to go through an entire compliance process with them where we explain every single data set, how the data set came to be, our own compliance processes, et cetera, which is one of the reasons they like working with us versus trying to do it themselves, is that they don't know how to do that. They don't know what questions to ask. They don't know what to look out for. And in a world where there's, of data, not everyone is the perfect player in that space. And so you need a third party that has vouched that this data set is a legitimate data set.
We'll just throw it up if there's any questions.
Sure.
Yeah.
I have sort of a chicken and egg question. So do you have a stable of data sets? So when a new project comes in, you query the data set on behalf of the client? Or does a client come in and then you have to go out and find a new set of data? So do you use existing data sets on behalf of your clients, or for each project, do you then have to go out and find and license the appropriate data sets depending on the query the client is asking?
Yeah, so the way our business model works is we have an eBay product, and we sell the eBay subscription. And that, we know all the key questions they have. We use data to answer those questions. It's at least monthly report on how eBay is doing, plus some additional kind of semi-month updates based on developments. And then that report is powered by a bunch of different data sets. And so there is a little bit of a chicken and egg where when we sign up a new customer, they sign up to get our eBay report or our Etsy report or one of our 70 other kind of reports. But we're always on the hunt for new data sets that could potentially allow us to launch on a new company. And so then when we launch on that new company, we go to all of our existing customers and say, good news, we now cover Alibaba, and therefore, who would like to sign up for our Alibaba report? And then we do that. So there, to your exact point, there really is a chicken and egg problem, and so we have to be very smart to not go pay for a bunch of data that we can't then use to actually, answer key questions that our customers have.
Thanks.
I have a question. Hi. So at the end of the last kind of question you were answering about privacy and just the compliance departments of the different funds that you work with, where's the line, have you figured out where the line is on what the SEC would define as non-public information, like when you're going out to all of these? And do you have customers that are interested in kind of not doing any compliance and solely just purchasing your data and making trading decisions off of it?
It's non-public material insider information. Our customers are extremely conservative, right? They've built really nice businesses. They do not want to get anywhere near any of that stuff. And so we are very conservative about that. There are many things, data sets that look promising that we will not go near because we're like, we don't believe that that is a valid data set and we can't get through the compliance process with our customers. So that's kind of the answer to your sort of first question. So the line is way over here. Your second question?
Customers that don't care about compliance.
Customers that don't care about compliance. So believe it or not, we have not run into a customer that does not care about compliance. This is they have real assets, and this is a very serious issue for them. Where you see it a little bit more is some customers are more willing to be a little bit more aggressive on the compliance front, especially funds that are not based in the United States are willing to be more aggressive. We've taken the conservative approach of, look, every product that we release, every one of our customers is willing to sort of take it, and so we're not going to have these products are for these types of customers.
Yeah, the reason I ask that is, especially with like a company like Tesla, where there's like a whole wave of people that are flying drones over Tesla's factories and trying to figure out how many cars they produced last quarter, and if that type of data is something that you're looking at or that you work with.
Yeah, we will look at anything that is compliant. It is our job. The job we do for our customers is we make sure that if there's any data out there for a company that we cover, we're going to go get it. And if that data is, obviously we confirm it's compliant, but we will get that data. So that is our job to do for our customers. That's what they rely on us to do. And so we will do whatever it takes to get that data if that is a compliant data set that can help answer one of their key questions.